Hey guys, the Federal Reserve just cut interest rates by 0.25%, which is the third cut this year after similar moves in September and October. So this is a slow, gradual easing trend, not a big emergency slash of rates. But here's where it gets interesting. The vote inside the Fed was split. One member wanted a bigger 0.5% cut, and two members did not want any cut at all. That is the biggest disagreement we have seen inside the Fed in years. So, what does that mean for you and for mortgages? First, mortgage rates do not move in a straight line with Fed fund rates. They follow what investors expect for inflation and a broader economy, not just what the Fed does at one meeting. Because this cut was widely expected, a lot was already priced into the bond market. That means the mortgage rates may not drop overnight because the Fed moved by only a quarter point. In fact, on some recent cuts, mortgage rates have actually stayed flat or even ticked up a bit as markets react to the Fed's comments, not just the headline. Second, the outlook the Fed gave for 2026 matters. Right now, they're only projecting one more small cut next year, and some members are still arguing for no more cuts or even a possible hike. That tells you the Fed is not convinced that inflation is fully tamed. That means you would likely see windows of opportunity where rates dip and then bounce rather than one smooth decline.